What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 17th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, we have some historic news in the world of decentralized finance. Just over the last 12 hours, we have seen the launch of the largest, not only governance token in the cryptocurrency space, but by far the largest token within the decentralized finance space. And that is the issuance of the token UNI, the native governance token for the Uniswap protocol. Now, many of you who have been watching my channel know that I'm a massive fan of the Uniswap protocol. I've used it for the last year or so, but along with that as well, we have it natively integrated as our key decentralized exchange within the Digifox wallet. So I want to go ahead and break down not only what Uniswap is for those of you who may not know, but also talk about what the UNI token is, talk about the supply distribution, talk about the utility, what it means for the governance and the future of the actual Uniswap protocol, and talk about the good and the bad, trying to take a non-biased, clear approach to talking about UNI. So everything you need to know here in one video. So let's just go ahead and dive straight into it, everyone. So starting off here, just to clarify, for those of you who haven't heard me ramble on about it multiple times over the last few months, Uniswap is a decentralized exchange, and more specifically, it's known as an automated market maker, or an AMM. Now, to put it simple, it basically is a platform where you can plug in your wallet, you can access it on a native wallet like Digifox or something like MetaMask, and you can go about interacting with the Uniswap protocol to basically make market orders into any token you want. So I could buy any type of ERC20 token that has a liquid pair on the Uniswap protocol. I don't have to go through a centralized exchange to do it. I only have to pay 0.3% on the actual core network fee, and I'm able to get it practically instantly in my own self-custodial wallet. So it fixes a lot of the issues with traditional exchanges. There's a lot of different DeFi apps out there in today's world, but man, has this been probably the clearest one from the get-go. A decentralized exchange, an ability to hold your own assets, and when you're ready to make a swap, being able to do it in a permissionless and trustless way. And that's exactly how Uniswap operates. You're interacting with a smart contract on the Ethereum blockchain. You're not dealing with any middlemen in between. You're not dealing with the Uniswap team. And the really cool thing about this is that Uniswap has expanded like wildfire over the last few months. We've been covering it here on the channel throughout the summer, but Uniswap itself has not only bolstered to new record highs of liquidity over the last few months, but along with that, it started to outpace the volume of major centralized exchanges like Coinbase, if you can believe it. So this is incredible stuff, and it's very important to understand what the UNI token means for the broader DeFi space as we're seeing Uniswap grow as a platform. So I've been diving through the token here, but I want to go ahead and just kind of break down into a few key categories, give you the quick rundown on UNI as a token. So I want to talk about, what UNI's purpose is in this case. I think it's always a good question to ask why Uniswap is launching a token as with any protocol. The second thing I want to talk about is community distribution. I want to talk about what the token entails in the sense of utility, like what it gives you as a holder of the token. And then also I want to talk later on about claiming your Uniswap tokens, because they're actually giving away a ton of free Uniswap tokens initially to everyday people who have interacted with the protocol. So people like myself who have engaged with Uniswap actually get free tokens, and I'll talk about that as we go through it. But I also want to talk about the good and the bad a little bit later on. Just like some things, not so much pretty to say the bad, but things that I would have rather seen done, or maybe, again, just want to talk about as ways that Uniswap can, again, continue to improve. So let's go ahead and talk about the general gist here. What is the purpose of the UNI token in this case? So over the last few months, we've obviously seen, AMMs, or automated market makers, which is what Uniswap is. It's automatically matching people. In this case, we've seen AMMs do very well. They've become the standard model for decentralized exchanges, and the 0.3% in fees that they charge provide a great incentive for people to provide, liquidity, basically provide different pairs. You have to provide an equitable amount of ETH against any kind of token that you want in this case. So it could be basic attention token, it could be Kyber network token, it could be any type of ERC20 token you can think of, all the different DeFi tokens, governance tokens. You can trade them within the Uniswap protocol due to the fact that people provide liquidity pairs and are expecting to make a return due to a certain amount of fees that they collect, about 0.3%. The problem, though, is that there's impermanent loss. It basically, in some cases, by providing these liquidity pairs, the liquidity providers can lose money over time, and that's why the fee compensates that. However, in order to still avoid impermanent loss in this case, even if the 0.3% is not enough, and also just to provide more incentive, Uniswap is creating a token in this case that it's granting to people in this case for doing these certain activities, for providing liquidity, for trading on the platform, doing all types of activities, right? And again, how this will change over time, we'll have to see, but it's basically an incentive mechanism to engage with the protocol in some shape or fashion. And we saw this through previous projects like SushiSwap, which again, used kind of Uniswap as a piggyback to basically build out the liquidity pairs in Uniswap and test out this concept, and then they went on to create their own swapping platform, their own AMM. And the thing is, they haven't really seen much volume interaction, so it seems like SushiSwap was a good experiment, but now Uniswap is basically taking that model and natively baking it into the protocol in a much more mature fashion. So I want to go ahead and talk about why I believe that personally. So let's go ahead and talk first about distribution here, right? The distribution is very important for any token. And I have to say, this is probably my favorite component out of everything that Uni does as a token. Like, I know it sounds silly and maybe kind of redundant, but the distribution of a token, guys, especially a governance token. So that's what Uni's purpose is, and we'll talk about that utility and how it's going to, progress Uniswap as a platform or as a protocol, rather than just having the team in charge. The best thing that the team did, and I want to give hats off to Hayden, hats off to everyone who played a role in making this, giving 60% of the token supply to the community is a fantastic allocation. 3/5 of the ever existing token supply that Uniswap will ever have going to the community. This is probably one of the best distributions I've seen so far. The more we can add to the community, the better. That's my general metric. But to see that the team is taking less than a quarter in this case of the overall supply, that investors are getting less than 1/5 of the total supply and advisors getting a fraction, this is fantastic. And considering that the inflation is going to grow over time, to see that the community size only grows and it further dilutes the team and the investors and the advisors, them taking the hit in this case for the broader community growing and the protocol growing, I gotta say, this is absolutely fantastic. One of the problems I've seen with so many governance tokens is that they claim that they want to build decentralized systems. They want to have thousands, if not millions of people participating in governance structures of these protocols. And quite frankly, I think millions, it's kind of far out there. I don't know if we're going to see that anytime soon. But I gotta say, it's the most ironic thing when you see so many protocols. And I gotta say, even protocols I like Maker, Compound, you also see as well some other different protocols, like especially the Yearn finances of the world, that claim that we have a limited supply, or we're doing this and that, and this is governance and this and that. But at the end of the day, they don't have anywhere near these kind of models of distribution for the community. Again, I really hate to see the craze around the Yearn finances of the world, because it doesn't matter if you have only 30,000 tokens. It's a matter of how fast were those 30,000 tokens issued and how many people own those tokens. And if you really understand it, it's not as clean as this right here, guys. This is what Uniswap should have done, and they did a phenomenal job of sticking to it. They didn't decide to just give their team half of the supply or give investors an entire quarter of the supply or more. I really think this was a good step. And this is something you have to consider when you're a long-term holder of these tokens, to know about the distribution in this case, because it is going to change about how the price is affected and also how the actual ecosystem grows. So we've talked about, the token, its kind of reason for Uniswap issuing it. It's to provide liquidity. We've talked about the fact that there's a very fair distribution comparative to most DeFi tokens, or governance tokens for that matter. Why is it that you would want to own UNI Token in this case? Now, again, I'm not going to talk about it on an investment thesis, guys. That's for you to determine. I'm not here to either sell or make you FOMO or FUD into this token. I just want you to understand it in this case. So the core utilities of the UNI token can be found at the bottom of the screen here. So again, I recommend you guys read through this article afterwards, the blog post that they put out, but I'll go ahead and just list out the very clear bullet points here. As a UNI holder, you will be able to participate in governance decisions, and we'll talk a little bit about that down here in just a moment. You'll also be able to participate in the UNI community treasury, so being able to allocate where some of the treasury funds go, to provide grants to certain projects, to maybe put money towards a marketing proposal to expand Uniswap, or maybe Uniswap partners, things like that, right? There's all kinds of things you can do with the community treasury in that case. The protocol fee switch, very important in this case to determine what fees you're going to charge in regards to protect against impermanent loss, but also not overcharge users for the protocol. the individual Ethereum name service domain, so that, again, people are making sure to interact with a correct address for Uniswap. And along with that as well, the Uniswap default list, so the tokens you see when you use the default list through Uniswap, and also the SOX liquidity tokens. So anyways, I think that's an interesting tribute there at the end. But I want to go ahead and talk a little bit about the governance. And this is something, that, again, that I personally think Uniswap did a great job on. And we'll see if maybe it adjusts over time. But I like how the governance system works right now. So from my understanding and interpretation, you need 1% of the Uniswap total supply to come together to even basically submit a governance proposal. So to even get an idea out there into the light of the overall governance structure of Uniswap, at least 1% of the token supply has to meet this. And along with that as well, you have to have 4% of the Uniswap supply are required to vote yes on this in order to take it to an overall vote. So imagine it like a layered process. To get a submission in, you need 1%. To even get it out there to vote in this case, to give some people some time to analyze it and see if it's worthy, you need to get 4%. And then after that, it's a matter of whether or not the majority of the token owners in this case decide to vote in a policy. And again, I can't emphasize enough, the community focus here in the distribution of Uniswap's token Uni is so important in making sure that the system actually works. And I can't wait to see more distribution, see more participants. Now, there's a 7-day voting period. Good week in this case, so not too short, right? Not 2 or 3 days, but also not multiple weeks where Uniswap is going to risk falling behind if another protocol has done something successful and they want to integrate it into the protocol. I think that's a very fair concern. And also 2-day time lockups on execution. So I'm going to say governance looks great, right? And along with that as well, the utility in this case seems quite interesting. Now, I will say above all here, just in bearing in mind with Uni as a token, I'm going to give the same criticism to Uniswap's governance token as I will to Compound and Curve and all these different DeFi protocols. Governance tokens are very speculative. We do not know how big of a role they're going to play in the long term, right? And to see if they'll be able to maintain their value. Again, you have to consider as you're holding UNI tokens, it is kind of in a sense an investment. So you have to think about it that way. So that's the only thing I'd say here. Now, I've talked about a lot of the things that the team has done right on this. And I want to say again, from the supply, from the way you get the team at Uniswap has gone about providing utility for it and providing governance ownership, and then also as well determining the governance process initially, I want to say hats off. This has been one of the best governance tokens that I've seen in the market. That being realized, there's a few things to consider. They're not entirely bad things, but there's some things I want to bring up here. The first thing that's important to understand right now is that if you actually want to go and claim your tokens through the website here, get your UNI tokens for engaging with the protocol in this case, all you basically have to do in this case is you have to go to the Uniswap website, and in the top right corner you're going to see 3 dots to the top right, and this will allow you to basically click on basically a button that will allow you to claim your Uni. You have to input your address, and it's as simple as that, right? You have to input your address that is interacted with the Uniswap protocol. That's the important thing to keep in mind. So very, very simple, right? But bearing in mind here, that's basically all you have to do. Again, you just go Uniswap, exchange. In this case, type in your address in the top right corner through the 3 dots. That's pretty simple, right? Now I want to go ahead and talk about my one big criticism here. Right now, it's not so much, sorry, I actually wanted to bring up one thing here before I bring up my big criticism. A lot of people are talking about market cap being too big. If you look at the fully diluted supply of the total Uniswap tokens in the market right now, you have about a $3 billion token. I'm actually not too worried about this, and there's 2 reasons. One, I think if there's any DeFi protocols that's going to be worth $3 billion, I think it's Uniswap. And second off as well, I would say that you shouldn't be focused on the diluted market cap. You should be focused on the circulating supply, because that is what affects the current market price right here, right now. Now, the nice thing is that there's actually a pretty relatively slow issuance over time of the Uniswap token. And you can actually look at that if you want to dive into it through the Uniswap blog post. So at a $500 million market cap, this isn't too crazy high. But at the same time, I personally don't think I'm going to be swamping out to buy it right now. I would say more than anything, if you've interacted with the protocol, claim your free tokens. I think that's a great thing. And it's going to be important to see how fast people claim their free tokens, because that will affect the circulating supply in this case. So it's very important to keep in mind. That's the real kind of effective circulating supply in the market, the available supply between the demand that's going to be coming on from buyers. So we talked about that. Right, we've gotten past all the market stuff. What's my one criticism here? My one criticism is that as much as I think it's great that Uniswap has worked on not only a community-first approach, in this case to distributing the token, but along with that, giving people the ability to claim tokens if they've interacted with the protocol. Makes me happy, makes a lot of people happy. The one problem is that this is soaring gas fees to levels we have not seen consistently hold in history. Now, there's been, yes, maybe a few anomalies if you take a look at the history of Etherscan, where people have spammed the blockchain, right? And it really didn't affect many people because many people weren't using the core chain of Ethereum yet. DeFi wasn't big then. In this case, people are trying to utilize DeFi protocols like Uniswap, and the fees are so high now because of this token distribution mechanism that it doesn't even make it practical for many people, many people, including myself, to use Uniswap as a protocol. And this is something that I really do worry about with the issuance of this token while everything is still on layer 1. And while Uniswap is already consuming the majority of layer 1 right now, or not the majority, but out of any player, the most out of any market player right now. So for example, the Uniswap token distributor. Uniswap v2, this is the Uniswap core protocol, right? Showing just how much impact this is having on the Ethereum network here. It's swallowing more than the underlying protocol, which has already been leading on the gas consumption of the Ethereum network. Just as comparison, here's Tether. And then you've also got the core UNI token, in this case on the Uniswap protocol, getting its own category. So we've got massive percentages of consumption of the core Ethereum network going through Uniswap. And again, bear in mind, is it Uniswap's fault that the Ethereum network has not scaled? No. It's not its fault that Uniswap, it's not Uniswap's fault in this case that Ethereum's not a layer 2. It can't process more transactions. It's the reality of the situation. Ethereum should feel very blessed that Uniswap has been built on this chain, right? It's going to bring a lot of value to Ethereum in the long run. But what I do want to say to the team, though, above all, it's not so much a criticism of this. I understand this is probably the only way you could go about doing it. The thing I will say, though, to hate in the team, I hope more than anything this incentivizes layer 2, because if gas fees stay this high, I think the team knows Uniswap and any DeFi protocol is really not going to probably succeed in the long run if fees keep climbing to higher levels than where they're already at. So to the team, it's a kind and friendly reminder. Keep killing it. Keep developing layer 2. I want to see Uniswap on Plasma. I want to see real scalability, real throughput, and zero cost transactions outside the core liquidity provider fee. I think it's going to be phenomenal, guys. I'm very, very excited for the future. And I just want to say it's so awesome to see some of these actual DeFi apps that have been working behind the scenes. You know, so many projects have raised much more, had done all these things before. And Uniswap came in with limited resources and still to this day has a much smaller team than platforms like Coinbase or Binance, yet they're starting to outpace volume of major exchanges. That is what DeFi is about. That's truly exciting. I mean, you can't put that aside, guys. So anyways, all in all right, I think this is a phenomenal event in DeFi history. I'd like to hear your thoughts down below, guys, what you think about it, any feedback you might have about like how, you know, the UNI token could grow in this case. I just think more than anything, you know, just coming at this from an outsider position, I think this is really cool. And I'm excited to see more governance tokens slowly but steadily start to take more of these more positive approaches, building more distributed ownership of the tokens over the long run. Anyways, I've rambled on enough, as you can probably tell, everyone. If you like this video, drop a like. If you like informative videos like this and you aren't already subscribed, please consider subscribing and hit the bell icon. We upload all types of content here on the channel, digesting all of the interesting news going on in the crypto and DeFi space. Last summary point here, Ethereum reacting quite positively to the news here, getting back up towards a relatively high range here. And again, I think this is going to be one of the major catalysts here that's going to continue pushing pressure on Ethereum, continue supporting a positive market overall with the success of Uniswap's launch here. Anyways, everyone, that's it for the video. Thank you all so much for watching, and I'll see you all in the next one. Take care, everyone.